Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. Stocks across the Asia Pacific in the red. That's as this momentum unwind continues to hit risk assets. Traders are also weighing on sentiment with U.S. floating new software curbs on China.
Oil prices in focus. President Trump announcing sanctions on major Russian firms to pressure Vladimir Putin into a ceasefire in Ukraine.
Plus, we hear exclusively from South Korea's finance minister about talks with the U.S. on Seoul's $350 billion investment pledge.
And I'm Stephen Engel in Shanghai, where there's a pretty big gaggle of executives, policymakers, and academics gathering here for the annual Fund Summit in Shanghai. Up next, we'll be speaking with the former IMF chief economist, Olivier Blanchard, and as well as Amundi Investment Institute head, Monica Defend.
Welcome to the program, the Thursday session, 28 minutes away from the opening bell. The approach to the open is one where we're looking at risk assets to the downside right now. Nikkei's off about 1.3. We'll talk about the yen in a moment because we are seeing a bit of a leg up in dollar yen the last hour or so. Rate decision coming through out of Seoul, Bank of Korea, no change there, 2.5%. We'll see what the statement looks like this hour. And the briefing in the next hour. One part of the equity market that's doing well, as you can see on your screens, is oil on the back of this pop. Flip the page, please. And oil prices gap higher at the open, West Texas Brent, and we are looking likely as well, when you look at Shanghai crude in a moment, likely going to see that on the back of these sanctions on two of Russia's biggest oil companies out of the United States. The dollar is catching a bid that's on the back of the recent weakness we're seeing in a Japanese currency. Also to note, in case you missed that, inflation out of the UK came in well below expectations. In fact, at the very lowest end of the range there. Just keep that in mind, of course, as we go into the session as well Thursday. Right. The approach to the open today is we are looking at consolidation really across these equity markets in Greater China, where you have really the main benchmarks in Hong Kong all closing below the 50-day moving averages. We are called lower, 0.25%. And as we were expecting there, Shanghai crude playing some catch up to the spike in oil prices we are seeing Thursday morning in the Asia Pacific.
Yeah, a key question, I think, with the oil story is, are these sort of sanctions enough to get the likes of China, the likes of India to really stop buying Russian crude? That certainly is maybe the target around these latest sort of moves. But yes, in terms of your agenda here today, Dave mentioned some of the technicals that we're seeing. Shenzhen-related stocks are in focus here after the city did unveil this 3-year plan, right? Whether it's strengthening the stock market, they want to have more M&A as well. So we're watching some of these Shenzhen-related stocks in particular. The game makers, there were some 159 domestic online games that were approved in October as well. We are getting closer to the end of this fourth plenum. That readout is expected to come out later on today as well. And as Steve mentioned, he is going to be at the Fund Summit. Plenty of guests throughout the hours there. Earnings like Prada are definitely in focus here today, and some inflation numbers out of Hong Kong to wrap up the day.
Yeah, well, all the lack of it. I think we're 1% inflation, with similar read that we got from the previous month. That's the expectation there. Okay, let's get you the latest on trade. A White House official has confirmed that the Trump White House is weighing curbs on critical software sales to China. Let's bring in Min Min Lo, our China correspondent in Shanghai for us this morning. Min Min, so reports are saying that these could be similar to some of the restrictions implemented against Russia following the invasion of Ukraine. What details do we know about this?
That's right, and Reuters was the first to report this. We know that the U.S. had imposed curbs on things like enterprise solution software, design software, CRM software as well. And right now, the White House is confirming that they are considering curbs on China. It's not too clear how sweeping those curbs would be, whether it would affect just directly U.S. Software alone, or whether there is this extraterritorial element to it affecting foreign products that rely on U.S. software as well. And when asked about this, Scott Besson said that everything is on the table when it comes to export controls, not just on software, but also on engine parts, for example, and the US will be coordinating with other G7 nations on their strategy. But right now, we have also seen signs of China preparing to retaliate as well, because we have seen how the Chinese Commerce Ministry had been sending out questionnaires to certain US chip companies asking for sensitive information about their sales data, their profits and cost data, and the difference between those data in China and their home countries as they try to gather intelligence for anti-dumping probes. And it shows you that China is not likely to back down to any threat of more punishment and export controls from the US.
It certainly complicates how we look at these trade talks as we count down to APEC. Okay, when it comes to the EU, though, they're also preparing trade options to counter these rare earth controls from China. What measures are they considering now?
Oh, that's $1 million question that we still don't know, because the EU has been pretty tight-lipped about that. But we know from sources that they are looking to prepare a set of measures by the end of the month in order to give them more leverage in negotiation. And this comes after both sides failed to reach a resolution after the EU trade chief had a talk with his Chinese counterpart, Wang Wentao. No resolution was reached, but the EU side said they do not want to escalate. But clearly, it's casting a shadow over the relations, and he says prompt action is needed, because you can see here China clearly dominates the rare earth supply chain, and it has tremendous consequences on many different sectors, from batteries to EVs to defense manufacturing, consumer electronics, chips production as well, because it's needed in those lithography machines. And so dialogue is ramping up. There is a Chinese delegation that is expected to head to Brussels for talks in a matter of days, but the EU has said once again that they are also going to coordinate with other G7 allies to look at how to diversify away from Chinese supplies.
All right, Min, thank you. Our China correspondent, Min Lo, joining us out of Shanghai there. We're checking oil prices as well, given what we heard overnight, the U.S. announcing sanctions on Russia's largest oil producers. And we did see that pop in oil, right? It was 4% gains. We're extending those gains here this morning when it comes to Brent as well as WTI. We're hovering around 60 for New York crude here this morning. And we're talking about these oil companies, Rosneft and Lukoil. Really marks the first time Trump has imposed these sort of direct costs over Russia, on Russia over the war as well. So this is the strongest effort yet to pressure President Vladimir Putin there on really when it comes to negotiating an end to the war in Ukraine.
We canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
Let's bring in our news desk editor. Sorry, Yvonne. Balazs Pence is with us right now. Balazs, we're 3 weeks into October. I think it was just this month that President Trump said something else as it pertains to Russia. Why this abrupt U-turn here?
Well, this is a really big deal, David, as we see from the market reaction. And as you said, it is a U-turn, and it signals a potential turning point in the president's approach towards Russia and towards the war in Ukraine. As we have seen, he has tried many different approaches to try to bring Putin to the negotiating table. They spoke in Anchorage a few months ago. They tried to put together a meeting between Putin and Zelensky. They were trying to put together another summit between Trump and Putin in Budapest in a few weeks. But none of that has seemed to work, and Russia has not scaled back its attacks on Ukraine. In fact, Russia has stepped up its assault on Ukraine. So now it looks like the president has run out of patience, and he went a step further than even the Biden administration, sanctioning these 2 very, very big, very important Russian oil companies that account for 50% of Russian oil exports, really hitting Russia where it hurts when it comes to financing the war. So we will see if that will bring Russia to the table. Just in the past hour, we got news that there was a phone call between Marco Rubio and Sergei Lavrov. So it does look like the two sides are talking. We're not sure what exactly they were saying, but it is very telling that so soon after the sanction announcement, the phone call between the two top diplomats already was taking place.
Yeah, that's a good point, Balash. You mentioned about these sanctions, and this is kind of the more direct sort of hit we're seeing across some of these Russian oil giants. How effective are they going to be? Do you think it's going to be enough to really stop the likes of China and Russia from buying Russian crude?
Well, where it's really going to hurt probably is India. Reliance, one of the biggest Indian oil companies, is one of the biggest buyers of Russian oil. When it comes to China, the president said that he does want to talk to President Xi about their purchases of Russian oil. It remains to be seen whether they can really pressure China. China has been buying Iranian oil, for example, even though those are under sanctions as well. So we're not really sure how much leverage he might have over China. But just the fact that they're talking about this and just the fact that they're methodically cutting off markets for Russian oil companies might have an effect. And we are seeing that these sanctions are going further than ever before. We also know that the EU is also putting together another package that targets Russian LNG. So that might be another way to kind of cut down on the financing effort for the Russian war machine. So these do add up. They take a while to work. They take a while to kind of have their effect. But it's certainly possible that they will be a consideration for the Russian government.
Balash, thank you. Balash Benz there joining us with the latest on all things oil. And coming up, we're going to have Goldman Sachs joining us to talk about when it comes to these Chinese markets. They're calling for a slower China bull market there. Si Fu from Goldman China Portfolio Strategist joins us later on what is going to work. They say 30% upside for Chinese stocks by end of 2027.
Yeah, patience is clearly key and central to that call. Going into the open today, 18 minutes away here in Hong Kong. Feels like winter already. Anyway, relatively speaking. 0.2 to 1% to the downside. This is the China Show. Good morning. Right, welcome back. So we've gathered some advice from Wall Street banks on the outlook for China, certainly the difference when you look at the short and the longer term. B of A says stay risk on. Morgan Stanley a few days ago said they're warning against buying the dip. Let's wait for how the talks play out. Nomura says risk reward no longer makes sense. Goldman is looking further down the road, 30% upside through 2027. The bank says that the gain will be supported by pro-market policies, rising profits, and also strong money flows. Let's bring in Goldman China Portfolio Strategist Si Fu is here with us on set. Good morning. Nice to see you.
Good morning.
Why 2027? That seems awfully far away.
We try to predict a more midterm, earnings growth or market upside.
Okay.
Because we think now it's kind of different. We recommend investors to think more structurally rather than the short-term trading opportunities. Over the past 2 years, a lot of time people said China has opportunities, but it's more trading opportunities last for a few months or a quarter. But this time, we recommend that investors think more structurally because we think there are some structural earnings growth drivers, including AI, anti-evolution, as well as going global theme, which tends to drive earnings by multiple years. So that's why we give a midterm focus.
Yeah, I like the way you mentioned it. It's a default mindset now, so you should just buy the dip. Anytime there is a bit of a pullback that we're seeing. But when it comes to trade tensions, and we've seen flare-ups like this before, the moment that we talk about more export curbs and whether this meeting happens or not, doesn't that actually add to more volatility? And maybe buy the dip might not be the best sort of strategy moving forward.
We do think it will create some volatility, but that's also why we recommend investors to buy the dips, because the volatility gives you the chance to get on the train. If we think about the long term, the key driver will still be earnings growth. So it depends if we can still expect the earnings growth to be there despite all the tensions, then that we can continue to be positive. So that's the story behind. If we look at the going global, which is most related to the US-China trade tension, we look at the past years, actually Chinese companies still managed to grow their overseas revenue despite all the tariff hikes. So that's why we turn to be a little bit more bullish, because despite the tariff, companies still gain market share through their competitiveness, price advantages, as well as their improving R&D intensity, so they improve the quality and the innovation capability. So that's why we are more positive in mid to long term. We acknowledge there could be volatility, there could be tensions, re-escalation, but we tend to think that more temporarily.
So in terms of the types of companies that will likely deliver those earnings, the economy doesn't seem to be doing as well as expected. Do I look at companies then that have a large presence outside China because of the earnings driver from outside? Is that the thesis also?
Yeah. We do think people need to be selective, remain selective, because it's not the whole economy are growing well. It's in the selective pockets they have more opportunities, including the AI, including the company going global, including the company which have anti-evolution efforts and make their margin improving. So these are the pockets we recommend investors to focus on rather than buying the whole markets.
And you also mentioned about kind of this $23 trillion of household deposits, right, that have yet to be deployed or underway, I guess. Yeah. We haven't quite seen that just yet, right? Really, it's been local funds, it's been foreign investors that have been kind of participating and been the bigger driver of these markets so far. So is it just kind of the early innings of this, or do you think things, how do you think it's going to play out in terms of the retail side of things?
It may take time. What we want to say is there's great potential there, but what may change their asset allocation, like decision, it takes much more time, especially for household. People have their habits. So in the past, people allocate more than 50% in property, but it has been gradually changing. If we look at the property share, at the peak level, it's more than 60%. Now it's 54%. So it's gradually declining, but it takes multiple years. So that's what we are expecting. Maybe the household may gradually allocate maybe 1% or less than 1% each year more in equities. It's already a meaningful amount.
Yeah, so we heard a very interesting comment this week on the shows from Eurasia, and really on the back of economic numbers, which I think apart from industrial profits, most were actually on the weaker side in terms of the sort of the cyclical reads, right? Yeah. I want to play that soundbite out. I want to get your reaction to that. Let's play it out, guys, please.
We have all seen the figures for the first 3 quarters, the GDP, the manufacturing investment, the export. It's surprise on the upside. I wouldn't go so far as to say these are fake data, but as indicators, they have lost all meaning for guiding business decisions. So what economic metrics are most useful now in your view to formulate strategy, if at all currently?
I think now we need to look more into details because there's huge divergence even within one sector. So if we look at the past, usually we just look at top line GDP and IP, PPI, PMI data. These are the common measures we look at. But now, even if we look at the consumer sector, the retail sales data remains weak, but we still see a lot of bright spots within the consumer sector. So now we add more elements from our sector analysts or industry data. Like if you look at online retail sales and separate them into different product categories, you can see the divergence. So that's give us more work, but it's also more interesting that you can see the different structural change within the economy.
Okay, so you mentioned 30% upside for maybe the next 2 years or so. Do you even look at things as binary as A to H, growth and value? I mean, how do you look at that? Or is it there's opportunities in both?
We don't think ANH is a binary choice, because if we look at the sector allocation, we tend to think them as a whole. Like if you want to invest in internet, definitely you have more choices offshore, and also high dividend yield stocks, we have more banks, insurance companies offshore, which are more attractive, having higher dividend yield. So that's why we recommend investors to think both, and from more structural perspective or sector perspective, rather than thinking just from the market perspective. And we do think both markets have their own reasons. For A shares, we still expect retail investors, if they get more involved and the policy, this can be more supportive to A shares. But for offshore, if the internet sector earnings begin to normalize and also global investor coming back, then it may benefit offshore more.
Can I ask you, we started off this, Goldman is advocating this paradigm shift. It's no longer a tactical market. 30%. If you think about it, 30% 2027 doesn't sound like a lot when you get 30% a quarter. The investor base is so used to having trading opportunities, especially retail. How do you sell that idea to an investor base that's gotten used to 30% returns over a quarter and not 2-3 years?
Actually, we have different type of investors. Currently, we definitely want to talk more to the long-term investors, the long-only funds. They haven't been back to China for a few years, so they got more interest this year. So this is an important pool that we are talking about. But for short-term investors like retail hedge funds, we think they still have the trading opportunities. Despite a slow bull market, we also think there are some trading opportunities. There could be volatility. There could be huge return divergence between different stock sectors. So that may continue giving them more alpha if they want to trade in short term.
Si Fu, thank you. China portfolio strategist at Goldman Sachs joining us here in Hong Kong. In terms of your pre-market, this is what it's looking like here right now. We talked about really momentum being sapped right now across the region here. We're seeing that a little bit in the Hang Seng. We're down 63 points at the get-go. 850 futures, a third of percent down this morning. Plenty more ahead. This is Bloomberg.
Right, welcome back. Pre-markets are, nothing to see here. What else are we looking at?
You're seeing HS Tech is slightly to the downside here. So, we are losing a bit when it comes to risk sentiment. Of course, we're getting closer to that readout from the fourth plenum.
Yes.
Maybe a bit of profit taking there. We're getting closer to next week, which is, of course, Trump and Xi meeting.
Dizzying.
Yeah, and you have these kind of latest when it comes to export curbs around, software and the like that really is kind of weighing on overall sentiment here today. In terms of stocks to watch, we're still focusing on some of the Tesla earnings and really the reaction that we're going to see in Asia, right? So if you take a look at everything from CATL, Gotham Lithium, some of these suppliers, mixed reading there, but CATL, there's a big move from UBS there. So they've raised their price target on improving sales outlook by about 29% each for the 8 shares as well as the Shenzhen listed shares as well. So there you go. Not much reaction to that as well, though today. CATL 8 shares down 0.8%. You're watching the China Show. The Open is next. This is Bloomberg.
Even though we're not going to have a lot of detailed policy, but it will give you sort of the direction, like how much emphasis they would put onto digital economy in terms of contributions to GDP.
Going to the industrial policies or even other policy fronts, we need to see maybe very interesting key micro themes. Number one, innovation. That's a top focus for next 5 to 10 years. And number two here is about anti-evolution. To revive the inflation and the corporate profitability, that would be very important to rebalance the demand supply in China. Number three, that's the consumption policies, which means linked with the social welfare, social safety net, investing in people, try to rebalance China internally.
some of our guests there talking about what they're expecting from this fourth plenum that's due to conclude today as well. That readout could come out later on today as well. So that could be the next catalyst here at a time when we are not seeing that many in this market. And you are seeing signs of maybe a bit of fatigue, right? Maybe a bit of profit taking leading up to the fourth plenum, to even APEC next week. So there you go. We're down about 1/5% on the CSI 300 there as well. We're watching oil prices very closely. Shanghai crude continues to stay elevated there. We're up about 3.5% on the back of what we saw overnight with the U.S. imposing sanctions on Russia's two biggest oil companies. And we're watching CATL A shares in particular. Yes, it's also a Tesla supplier, but also when it came to UBS raising its price target by nearly 30% for the A and H shares, really when it comes to the encouraging electrification trend that they're seeing around heavy trucks. Also that buzzword, energy storage system battery demand. So there you go. We're up about 0.4% for CATL. Capricorn on the other side, we are seeing it down about 1% here. Chip stocks obviously in focus, just given what we heard from the U.S. there when it came to export curbs, when it came to software and the like. So certainly that's the one thing to watch. And maybe that's what is kind of sapping the risk sentiment here at this moment and why we're seeing momentum sort of unwind continuing for another day. Hong Kong's looking like this here right now. We did see in the pre-market, HS Tech was on offer. We're down about 0.5%. Seeing some marginal losses here when it comes to Alibaba, Tencent, Meituan as well. We did get some gaming approvals. That's not really helping some of these gaming stocks like Tencent here today. It's interesting to note the CATL H shares, though, are down when the A shares are up. So a bit of a divergence there here this morning. In terms of oil, we talked about the oil moves that we're seeing. We're watching some of these sort of energy players as well. So unsurprisingly, you're seeing CNOOC and Sinopec are up. And we're watching platinum stocks as well. We saw prices really jump and really echoing what we saw with this recent squeeze in silver prices as well. But we're not seeing too much there. But there you go. Zijin Mining, though, is down 0.8%, Dave.
Yeah, so I'm glad you mentioned platinum. So platinum, gold, some of the crypto plays, some of the big AI plays have really been sort of the momentum trades that have sort of petered out. So interestingly, when you look at, I think, the point that when you look at the open today, just as an example, I'll get to this in a moment, right? So it seems like investors are heeding the gospel coming out of Morgan Stanley. Don't take a lot of risk, don't buy the dip, not a lot of risk taking ahead of the crucial talks next week. So where does that leave momentum, right? So we've seen a lot of the winning trades come off. We were looking at this same graphic this time yesterday, which had momentum as a factor underperforming. And same graphic right now, but reset to Wednesday. And as you can see, that's even done worse in the overnight session. How that's actually come out and emerged in the Chinese market context is that this consolidation in the benchmarks, we talked about how Hang Seng Index, flip the page, Hang Seng Index, Hang Seng China, have all consolidated and closed below the 50-day moving average, underscores this pivot back to quality, this pivot back to value, as you can see on your screen. So over the past week or so, this has really emerged as your outperformance. And we'll see. Likely will remain the case up until we get more clarity, Yvonne, on these trade conversations, which goes into everything, right? The external environment. I would imagine this goes into monetary policy decisions. We had one from the Bank of Korea earlier just now, and just in terms underscoring the caution out there.
Yeah, you have seen most central banks here in this part of the world actually, begin their cutting cycles before the Fed did, right?
Yeah.
And you heard from BI yesterday from Indonesia. I mean, there was another pause or a pause after several cuts. Bank of Korea also decided to hold this time around, and they really have been on a pausing sort of stance here since July after several cuts from the BOK as well. We're getting that statement coming out through in this meeting. They want to maintain its rate cut stance right now, but they will be adjusting the timing and the pace of any further cuts. What has been the sticking point has been about housing, right? When you talk about housing market rally that really threatens to cause financial imbalances, it's been driving up mortgage debt levels higher. So that is a financial instability sort of issue that the central bank is focused on today. So they're monitoring housing, debt, FX volatility, and that certainly is a little bit more dovish. The market is interpreting that statement from the BOK. But the key question from our economists is this the end of the rate cut cycle for the BOK?
Yeah, and we'll need to wait and hear for the briefing this time in the next hour to really get a better sense of what the mood is in the room there and the votes and everything else. Because there's one one meeting left, I believe, before the BOK basically wraps up its monetary policy agenda for the year. Anyway, we can table that for now, revisit that later when the briefing begins in about 60 minutes or so. In the meantime, back to this Tesla story, Tesla suppliers coming up on your screens. You have third quarter profit plunging more than expected. You have, at least they're pointing to rising costs, undercutting a record quarter of deliveries. Adjusted earnings, 50 cents a pop, 31% down from a year ago. Missing estimates, they're a sign of pressure that automakers are facing from shifting trade policies. All the numbers on your screens. For the takeaways, Annabelle is here with us to help us understand the bigger context here, Belle.
Yeah, well, I think you can see from the screen there, some things were good. I mean, the revenue came in better than expected. Margin as well was better than expected, but there were clear downsides in the numbers, especially because this was a period where you had the EV subsidies that were ending in the US, so there was a big rush for people to go out and buy their EVs as well. But in terms of the actual numbers, it was that 40% in operating, or that 40% drop in operating profit that people were really paying attention to, because, I mean, at least from the analyst perspective, because it was very unclear that the earnings call kind of was quite, talking about these future initiatives like robo-taxis, robots, for instance, but we didn't really get very much clarity on exactly how Tesla's planning to revive its core business. But it does certainly tell you there's this sort of lingering uncertainty what the near-term growth prospects for the business are, and also that this is a company that is not immune to the costs of rising tariffs. And actually, Tesla is saying that during the latest period, it was a $400 million impact from US tariffs. So you saw that, I mean, very much reflected in after-hours trade because the stock was down. You're seeing it again reflected in some of these suppliers today that are a bit under pressure. And it is going to be quite challenging, of course, even though there were, as I said, more uplifting parts of the call, like talking about Optimus, for instance, which is their humanoid robots program, and they're putting these supply chains in place now to hopefully bring it to production by the end of next year. And that's exactly where at least Elon Musk sees the business heading.
Yeah, and you mentioned a little bit more about its AI chip, right? AI 5 and this partnership with Samsung in Texas. What role do you think Samsung is going to play in that now, especially with Tesla has a partnership with TSMC as well?
Tesla has a partnership with TSMC, and this is their line of AI chips. So we've seen them, TSMC, making earlier iterations, but we did have some news reporting earlier this year, actually at Bloomberg, which Elon Musk confirmed that scoop on Twitter, or X, but for the AI 6, which is the next generation. But the AI 5 is actually something that Elon Musk sought to clarify who's going to be making it, and he said that yes, TSMC is going to take part of it, but Samsung's going to take another portion as well. So it tells you that Samsung is actually managing to build out and step up its production, because, as you said, they've got that plant in Austin now in Texas, and they're certainly trying to continue building out their foundry business. But yes, these are chips that Tesla relies on for their self-driving cars. It's also technology that it's going to be using, or hopefully putting into its lineup of Optimus robots as well.
The other story related to this is pay. And, the headline is phrased, our headline.
It's a great headline.
That he hijacks the earnings call with his $1 trillion pay plan request.
Yeah, I think...
What's the case?
Well, from anyone's sort of perspective, this was a pretty ho-hum earnings call until the very end. Elon Musk decided to really make the case why investors should be approving this one, or potentially $1 trillion pay package. So the vote on this is coming up in November 6th. So it's in a couple of weeks from now. And Elon Musk's point, he didn't really make it so much on the compensation part. And it is important to note as well that he's got to really meet a lot of different milestones to actually reach that $1 trillion mark. But at the same time, when it comes to how much ownership he's going to have of the business, what he's pushing for is for a 25% stake. Well, that's the amount of control that he thinks is needed to give him influence over where the company goes from here. And that was the point he was making at the end of the earnings call, that he doesn't want to have this influence from these other sort of different investors in the business as well, trying to steer the direction of the company. I mean, he had the backing of the CFO as well. He actually had the last word, the CFO, but he essentially said that this is a package that was put together by the board committee, and it did ensure as well that he won't get these profits unless he makes those substantial returns. But as I said, that vote coming up in a couple of weeks from now.
Yeah, it's going to be pretty key as well. Our Bloomberg Asia Tech correspondent there, Annabelle Jewellers, with the breakdown of those Tesla earnings. We're going to have more when it comes to Tesla here, whether it's the pay package, whether it's these new chips the next hour. Deepwater Asset Management's Munster is going to be joining us. He says, look, it's not just a car company. We got to look at other things in this company here. And autonomy, he says, is one of the big narratives.
Yep, robo-taxis. Among many other things. Just to get you through some of the other news that we're following this morning, big announcement coming out of Shenzhen. Yvonne talked about this earlier on. So the tech hub is looking to strengthen its stock market as part of this new 3-year plan. So local authorities are saying that they will support eligible enterprises seeking to list or refinance in Hong Kong to make cross-regional M&A more efficient. And the plan also calls for stronger cooperation between Shenzhen's and Hong Kong's stock exchanges. Now, Bloomberg has learned that Chinese chipmaker Yangtze Memory is considering an IPO in mainland China at a valuation that could exceed $40 billion. Now, sources say the company may seek a valuation of around $28 billion and is working with banks, CICC, and CSE Financial. Separately, Changshin Memory Tech is also planning to go public onshore.
Well, coming up, we're going to be live at the Bund Summit in Shanghai, speaking with the former IMF chief economist Olivier Blanchard. That's next. This is Bloomberg.
I think the U.S. has always underestimated China's bargaining chips. We view in the United States as a relationship that's a one-way dependency, that China depends on us and we don't depend on China. I've written 2 books. I'm actually starting a 3rd on codependency, where we both depend equally on each other. And I think China is demonstrating the two-way nature of this important economic and security relationship.
First of all, I think wealth management becomes a very important initiative for DBS China and also for the group. I think there is a permanent shift of the wealth management industry in China. The high net worth individuals are more matured and they look for safe assets and diversification of asset allocation.
Some of our guests there from the Bund Summit in Shanghai this morning. And of course, as that event is underway, we're bringing together, of course, policymakers, academic leaders, and senior executives on the show as well. Let's take you there right now, where our chief North Asia correspondent, Stephen Engel, is standing by with our next guest. Hey, Steve.
Hey there, Yvonne. Yes, we are here at the Peninsula Hotel on the Puxi side of the Huangpu River at the Bund Summit. It's held every year and brings together those top policymakers and, of course, academics and professors and economists, such as the distinguished one we have here, Olivier Blanchard. Thank you so much for joining us. MIT Professor of Economics Emeritus, also a senior fellow at the Peterson Institute, and, I might add, the former chief economist at the IMF. Let's talk with what we just heard Stephen Roach and I talk about, and that is the U.S.-China relationship through the lens of what has been 6 months now, 6+ months of Donald Trump's tariff regime globally, but particularly the focus is on China with the Trump-Xi possible summit coming up. How do you see the impact 6 months on now on the global economy?
So remember, the tariffs are not only on China.
Yes.
We're suffering from it in Europe and so on. So is the tariff policy working in the US? I think the answer is no. And the idea of a tariff is if it works if you succeed in getting the exporters to decrease their price so that the post-tariff price is the same, in which case they basically get less money, you get the goods cheaper, you get funds. That's just not happening. Basically, the exporters to the US have continued with their old prices, so the post-tariff price is higher. Now, it hasn't shown on consumers because the importers, the distributors, have taken the hit. But these are US importers, US distributors, so their margins have been reduced. Eventually, they have to pass it on.
So, so how
we're basically just
is that?
seeing a delayed effect, but in the end, it will be the US which is paying for the tariff. Imports to the US have continued at exactly the same rate, or it increased. Inflation is not showing up yet much, but it will. So I think the net effect is it's a loss. And if I may just add something, this is the short-run effect. The long-run effect of destroying rules, not respecting rules, killing trust, That's incredibly costly, but it doesn't show up in the quarterly numbers. Right? It will show up over the next few years. But on that, I think it's not working.
So how does the specter of a stagflationary environment in the United States look like if the Fed already pretty much pricing in a couple of cuts the rest of this year, so they're dovish, but the specter of inflation is still running well higher than the Fed's target rate of 2%?
Yeah, so the U.S. situation is half is the tariff story, the other half, and maybe more than half, is AI.
Yeah.
Right? So the net result, and Trump is very lucky, because I think the tariff affecting part is not doing great, not doing terribly, but not doing great. The AI part is doing superbly, so the US economy is fairly strong, right? As a result, I think the pressure for inflation to come down is very weak, so I don't think the Fed will cut rates very much.
And the net impact on the global economy, not just the U.S. and China, is potentially, even going further, is the disruption of supply chains like we saw during the pandemic. That's a highly inflationary environment as well.
Highly inflationary, except that firms seem to be quite able to readjust faster than I thought they would. I mean, if you look at China, its exports have continued to increase, despite the fact that the exports to the US basically decreased. So China as a country has been able to reallocate basically fairly quickly, find new markets, right? Find rerouting, find all kinds of things. I think most firms are fairly good at it. I mean, there's no question it's not good, but it's not, a catastrophe that somebody would have predicted. It's not as if firms are completely unable to produce. It's not COVID.
Right. It's not, but it is man-made.
But it is not good. It is man-made. Well, COVID, there's some questions to it very much, but
that's a different discussion.
Yes.
So how much credence do you put into the argument that this potential meeting between Xi and Trump is, I wouldn't say the panacea of all their ills, but is important to find stabilization in that relationship? The markets have been wobbly, completely volatile because of the uncertainty going forward. And there's this threat of 155% tariffs by Trump on China. Yes, it might be a bargaining tool, leverage, but still there's that specter of even higher.
I'm not sure meetings make that much of a difference. We've seen this in the context of Ukraine and Putin. Right. It is up, down, and so on. But I think actions do. The fact that China really has some leverage, I think, is becoming fairly clear to Mr. Trump. So he's going to be more careful. There is going to be uncertainty. I don't think this meeting will solve it. Well, he goes up and then he wakes up, he puts another tariff and so on. Can only help. I'm all in favor of meetings, but thinking that meetings are magic, I think, is an illusion with that guy. It's just not going to happen. Let me just add something. The uncertainty, I didn't mention, but the uncertainty is really having an effect on firms' decisions and so on. And that's not going to go away anytime soon.
And on that front, what's the view from Europe? Obviously, Europe is kind of caught between as well being a legendary or over time the ally of the United States, but also having to pick its fights as well, whether it's the flood of EVs into the European Union from China, the spiral downward of and the price competitiveness of the Chinese products, but also now on rare earths. They're trying to find and strike a response to China's actions on export controls as well. So what's the view, if you can encapsulate, from Europe?
I think Europe has the opportunity to be the responsible guy in the room. So we don't want to follow the US going against China. We want to basically work with the rules as they were. Maybe we modify them. I think working with China is of the essence. Now, that doesn't mean it's easy, because China really wants to export to the European Union in a way which makes it very difficult for us to react. But I think sitting down, this is one of these meetings which might actually be useful, because I think there's still trust on both sides. So I hope that Europe and China work together.
We'll see. Olivier Blanchard, thanks so much.
My pleasure.
For your time here on Bloomberg Television. All right, David, I'm going to send it back to you. Still more to come from the Bund Summit here in Shanghai.
Yeah, there we go. Olivier Blanchard there with Steve at the Peninsula in Shanghai. Right, coming up, we'll have more, of course, conversations from the White Hand, I think it's Nianhui, I think. Yeah, there we go, Bund Summit. Coming up with Steve later on, as you can see on the screens. Amundi's joining us, as well as former ECB Governor Jean-Claude Trichet. This is The China Show.
All right, we're checking the Kospi here this morning, so it looks like we've erased quite a bit of losses there. We're slightly just lower now after what we heard from the BOK. It seems to be some dovish comments in that statement here. We're expected to hear more in the press briefing in the next hour. A lot of key questions where they talk about the concerns around housing prices and FX, so that leads to maybe a bit more of a dovish lean from the BOK, and that's why maybe people are willing to buy the dip, especially when it comes to some of these chip stocks here today, Dave.
Yeah, the fact that they're, I guess, fronts highlighting the potential negatives is almost massaging the mindset of potential cuts coming through. I think the statement, in fact, when you look at the statement from the last meeting, not the one today, I think back in late August, they said that 5 out of the 6 were actually open to a rate cut in the next 3 months. So this meeting's part of the next 3 months. The next meeting, the last one of 2025, still falls within the 3-month window for a possible cut before the end of the year. We'll have to wait and see, is the point out of Bloomberg Economics on how and what they say in about 20 minutes time when the briefing begins. So stay tuned, obviously, for that one coming through as well. Okay, before we wrap up the first hour, just a brief look at these markets, cash markets, 25 minutes of the cash market session. PopMart is down about 7%. We're trying to figure out the whys, but I can tell you this is really part of that cohort of momentum getting squeezed. We're down 7% on PopMart. Zijin Mining is a gold play, obviously related to that very theme we just pointed out there. So the platinum play is not really coming out in Zijin, and of course SMIC, among other things there as well.
Welcome back to the China Show. Here's a look at the HSI half hour into the session. Yeah, it's a bit chilly out there. You're feeling that sort of chill across these markets as well. Perhaps it's a bit of momentum being sapped here, whether it's more export curves in the U.S. when it comes to software. You have more sanctions on oil companies out of Russia. That certainly is leading to risk appetite being sucked and faded here this morning. So certainly that's one thing to watch. And obviously we've been talking a lot about the plenum, and that comes out, that readout later on today as well.
Yep, we're last day of the plenum, and we're looking at any sort of signals on industrial policy, percentage of consumption that goes into the Chinese economy, because for now there's really a lack of catalyst. So at least for one, when you look at Chinese equity markets, we've been consolidating. As you can see, some downside even across some of the big momentum plays, as Yvonne is pointing out. The other thing is Shenzhen-related shares coming up on your screens. We'll talk more about this 3-year plan. More a longer term, speaking of the readout, this one is also more a longer term exercise, but it is playing out across these markets today. 3-year plan to boost market cap, to boost M&A efficiency, co-op closer ties between the Shenzhen exchange and what we're doing here in Hong Kong as far as the exchange is concerned. Now, apart from that, right, so apart from a few bright spots, the other one being oil, which we'll get to later on, apart from that, most other things are actually meandering below the zero line. We have these little flare-ups as far as trade goes, right?
Yeah.
The U.S. and software in China, U.S. oil in Russia, and all these other things are just clouding the outlook.
Yeah, I mean, there's, as you mentioned, right, there's no reason to kind of continue on buying the dip, at least today, just given these recent flare-ups, right? And I think the key question when it comes to these new U.S. software curves is this just pertain to just U.S. software exports, or are we talking about this sort of long-arm jurisdiction once again, where it's basically even foreign-made goods with U.S. technology is going to be in the limelight, right, or in the spotlight? So certainly that's going to be the key question here, but even the enforcement side of things, according to our geopolitics team, it says it's going to be pretty tricky moving forward.
Yeah, everything is on the table.
Everything.
Right, ahead of next week. And it really begs the question. I think it's also playing out when you look at the central bank decision that was largely uneventful at the Bank of Korea. They kept it unchanged. But when you look at the statement, they're flagging the risks to the domestic economy. The external environment isn't is still as uncertain.
Yeah.
And I think that one is actually coming out this hour when you have the briefing starting in about 20 minutes from now. So some of the analysts that have reacted to just the statement itself have said that this opens the door for a cut in November for the Bank of Korea, and that really goes into everything, all this uncertainty that we've been talking about here.
Yeah, and why Wall Street is still split when it comes to these Chinese markets and whether to buy the dip or not.
Yeah.
Right? When we had Si Fu from Goldman saying, look, these flare-ups in geopolitics is perfect when it comes to buying on the dip. The default mindset should be that. They're calling for this sort of slow bull market up until 2027, but you have to like some Morgan Stanley saying, look, this flare-up is indication that trade is still very much a big overhang in this market.
Yeah, Goldman Sachs doing the Guns N' Roses there, patience, as they say. There we go, Axl Rose special from the early 90s, late 80s. Anyway, there's no segue from that to South Korea's finance minister talking about how trade talks with Washington are now focusing on the structure of this $350 billion investment pledge rather than a currency swap. We spoke exclusively with Koo Yoon-cho about the progress of negotiations.
지금 베센트 장관은 그 한국의 외환
Besant has understood that due to the current state of Korea's foreign exchange market, we cannot pay up front. He understands that. However, regarding how to proceed on this, with negotiations currently underway with the U.S., I ask for your understanding that I cannot yet provide specific details on the plan.
Bank of Korea Governor Lee Chang-yong said that the maximum amount that can be raised in dollars annually without market disruptions is $20 billion. Are we looking at around those figures right now?
예, 저희들이 maximum.
Yes, the Bank of Korea currently estimates that the maximum amount we can raise without significantly impacting the foreign exchange market is $20 billion.
What does that mean for upfront payments, though? Does that mean front-loading some and then paying annually?
그런 부분
Regarding that aspect, we are keeping various possibilities open for the foreign exchange market and are currently in negotiations with the United States.
Because that's one of the options that you've talked to Secretary Besant and to Washington about.
그것은 제가 지금 확인하기가 어렵고요. 다만
I cannot confirm that at this time. However, Secretary Besant fully understands the difficulties in Korea's FX market and is having internal discussions on how to respond to the situation.
Because of the potential financial shocks to South Korea, there was a lot of talk about a potential currency swap agreement. Is that still on the table?
통화 수합은 미국과 한국 간의 이
Whether a currency swap is needed and to what extent will depend entirely on how the deal is structured. It may not be necessary at all, or it could be arranged on a smaller scale. Therefore, the currency swap itself is a necessary condition, not a sufficient one. So, depending on how this deal turns out, we plan to consult with the U.S. regarding the currency swap aspect as well.
통화 수합이 된다고 인해서
Even if we have a currency swap, it will be difficult to just blindly provide money to the U.S. without considering the commercial rationality or viability of the project being selected.
I'm understanding then that this option is still alive. If that's the case when it comes to perhaps the structure, could it be something similar as to the Argentina style going through the Treasury instead of directly from the Fed?
지금 이 통화 수합에 대해서는 우리가
Regarding the currency swap, we're not doing it because we lack short-term foreign reserves like Argentina. It's a situation where Korea needs foreign currency to make long-term investments as requested by the U.S. So the U.S. must provide the lacking foreign currency. Therefore, it doesn't align with the conventional short-term currency swap structure. So, regarding that aspect, if we were to engage in a currency swap arrangement with the U.S., there are further points that require discussions.
That was the South Korean Finance Minister Koo Yoon-cho there speaking with our very own Sherry An. And I was also checking oil and really this kind of pop in prices that we saw here, extending that here today. And some of these energy players, like the likes of PetroChina and Sinopec, are continuing to head higher here this morning on the back of what we saw, right? The U.S. announcing sanctions on Russia's largest oil producers in its strongest effort yet to pressure President Vladimir Putin to negotiate an end to the war in Ukraine.
We canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
Let's bring in our oil trading reporter, Wrong-Way Neo, out of Singapore. Yeah, let's talk about this. So, what does this mean for? Let's do it at second degree here. What does this mean for oil flows to the Asia Pacific?
Bear in mind that Russia is a huge oil producer, and a large part of their exports are actually flowing into Asia to huge buyers like China and India. Now, of course, the two entities that were sanctioned, they effectively made up nearly half of Russia's exports, and it has spun a lot of concerns over near-term supply risks, which is evident in the price spikes for both oil benchmarks, WTI and Brent today.
Yeah, it came as a bit of a surprise, right? This pop in oil prices at a time when the market has been weighed down by oversupply risks and the like. So what are people saying about oil's broader outlook now?
Right, so this also comes at a time, like you, Yvonne, like you rightfully mentioned, it comes at a time when oil prices were a bit low, and that's actually the theory of at least one analyst I spoke to that said that kind of enabled President Donald Trump to effectively put on sanctions at this time when the oil prices are low, so that the market is effectively not buoyed by this slight uptick in oil prices. Now, of course, like I mentioned earlier, with India and China being major importers of Russian oil, that's expected to divert flows. Let's take the example of India, for instance. Right now, India and US are in the midst of talks, and India has sort of agreed to wean off their Russian oil purchases. But with this latest escalation from the US, we can expect India to more actively seek alternative sources from producers like the Middle East, and that could create a short-term demand spike for crude oil, especially here within the Asia region. Now, the more uncertain thing will be for China. China is also a major buyer of Russian oil, and the tricky thing is that actually China and Russia has an oil pipeline. So details are unclear. It's not even half a day since the sanctions were announced, and traders are desperately trying to find out more details about how this could affect near-term trades, especially for things like long-term deals for the pipeline between Russia and China.
Fantastic. Wrong-Way Neo there, our oil trading reporter out of Singapore for us, and the latest here really on this sudden flare-up. We woke up to this story. Today, markets are certainly reacting to this. Right, coming up here on the China Show, we're breaking down the latest earnings coming out of Tesla with Deepwater's Gene Munster, and hear why he thinks it remains the best positioned company for AI in the real world. This is Bloomberg.
Our goal, explicit goal, is to have an oversupply of AI5 chips. Because if we have too many AI5 chips for the cars and robots, we can always put them in the data center. So we already use AI4 for training in our data center. So we use a combination of AI4 and NVIDIA hardware. We're not about to replace NVIDIA, to be clear, but we do use both in combination. We're actually going to focus both TSMC and Samsung initially on AI5. The AI5 chip design by Tesla is, I think it's an amazing design. I don't hand out praise easily, but I have to say that I think the Tesla chip team is really designing an incredible chip here. This is, by some metrics, the AI5 chip will be 40 times better than the AI4 chip. Not 40%, 40 times.
Elon Musk there speaking during Tesla's earnings call, saying that both Samsung and TSMC will work on the company's AI5 chip design. And you are seeing both of those stocks slightly to the downside here at Samsung, but TSMC down about 1%. We're also watching some of the Tesla suppliers like CATL, where you're seeing the 8 shares down some 3% in Hong Kong this morning.
Yeah, that's coming up on your screens. There we go. Let's talk now. Oh, wasn't it already up? Anyway, okay, I think I saw it twice. Well, that's just me. Okay, let's bring in Gene Munster, co-founder and managing partner at Deepwater Asset Management. Gene, good morning, sir. So, what did you think?
Well, I think that the big picture is intact, and the big picture is that Tesla remains the best positioned company when it comes to AI in the real world, sometimes referred to as physical AI. All of those pieces are in place. They've got $41 billion in cash. That increased $400 million quarter on quarter. That compares to GM, Ford, each of them with about $23 billion. And they're investing it aggressively into autonomy. So that's at the highest level. Of course, the stock is down, and one thing that is triggering that is when we talk about these ambitious goals about being the world's most progressive company when it comes to AI in the real world, when we talk about those goals, they're far in the future, 26, 27, 28. And any little tweaks in terms of the timing of getting there can be amplified in the near term. And that's what we're seeing in after-hours trading here. And just, David, to shine a little bit of brighter light on it specifically, is they talked about the timing of removing the driver, as subtle as this sounds. The driver in Austin, they had some rumors were expecting that driver to be removed in the next couple months. Elon said that they will begin to remove the drivers. That means they'll still be in Austin. Some of them will be removed by the end of the year. And so I think that the big picture is on track. Understandable why shares are trading off, because that little nuance around the timing of removing those safety drivers.
Yeah, it's interesting, right? The stock trades almost like an AI stock, as you mentioned, Gene. But it reports, some say, like a car company, right? When you talk about these EV tax credits are going to be expiring, and maybe it leads to a lot of uncertainty. How do you counter that, right? When it seems like near term and even in the intermediate term, we don't have that earnings growth trajectory.
Well, I think there are two pieces here, and I've studied Tesla for the better part of a decade, and over the last couple of years, there's a disconnect between how you normally think about owning a stock and what's happened with Tesla's valuation. And I personally own the stock, and I think that this company is going to be a many trillion-dollar company in the future. But that is not based on kind of the substance around the numbers, just to, at least the near-term numbers, just to put that in a context. Tesla trades at 13 times revenue. Apple, historically, it's traded kind of around where Apple is because it's a hardware, software type of revenue. And Apple's trading at about 9 times revenue, next year's revenue. And so, Yvonne, to answer your question, is how I think about this is a really unique case. This company is unique not only in the fact that it is so ambitious about building a future that no one else is really aggressively pursuing, Waymo to a smaller extent. But I think that this, because it's so ambitious, investors need to almost disconnect themselves with the realities of kind of valuation and think about this in the big picture. And that big picture, of course, is building towards things like Elon talked about tonight, 50, 100 million Optimus robots. I mean, these numbers are, that's over $1 trillion in revenue he's talking about if you take the low end of that. The numbers are pretty crazy, and you have to start to believe at least some of that's going to become a reality.
So Gene, what then do we pay attention to? When I say short-term metrics, I mean what we can glean from companies' financials to be able to realize those longer-term goals. And what can we ignore?
Well, the things you should pay most attention to is, first, do they have the resources to get there? I talked about where the cash is. They got that. If they were running low on cash, that would be a problem. That's not the case. It's the opposite. Some other kind of key critical metrics, it's not about deliveries. It's about, for example, how many FSD miles are driven. So they don't break these numbers down specifically, but they give a chart, and you can kind of back into it. And in the September quarter, there's about 1.1 billion miles driven as FSD. Now that's flat from where it was in the June quarter, up from 700 million in the March quarter. So we saw a step up in June and then a flattening. And to answer your question, we'll start to see those metrics starting to accelerate. That means that consumer adoption is starting to value, and the subscription revenue is starting to take off. I do expect that all-important metric around how many full self-driving miles are driven to step up to be much bigger than 1.1 billion in the December quarter because of the surge in deliveries that they had. They came with 1 free month of subscription for FSD, so you should see an improvement. But those are like a couple examples, and then it gets to those little things like we're talking about today. When did they remove the drivers? We have to, again, you have a point on a chart well out into the right, and you have to figure out how do you get to that point, and you need to start making progress today.
How do you see that competition evolving in the robotaxi space? I mean, some analysts say, robotaxis are still years away, that technology, from the likes of Waymo, Amazon, and the like. I mean, do you see that it has the capabilities of really taking market share from the likes of Uber and Lyft, for example?
I mean, the reality is Uber and Lyft are in a long-term, very difficult position. I think that in a very realistic, maybe in a quiet moment, they would agree to that or tell how they actually feel. And so think of those companies as needing to partner. And the other reality is that if you look at, and I think this is one of the most promising parts around the whole autonomy question, the competition question, and just the broader question about how you get there, is the way you monetize autonomy is through electrification. And when I think about the competition piece, it's not just about Waymo and Uber and Lyft. Uber and Lyft are in a difficult place. But it's also about traditional car companies slowing their investment in electrification. And essentially, they are making a bet that it's going to take a long time to get to autonomy. And if, in fact, there is this breakout moment, Elon referred it to this as this rocket ship moment that's going to happen in autonomy, it really will cause the competition, all the ones we talked about here, to be flat-footed and be, I think, in a very difficult place. And so at the most basic level, Tesla really doesn't have any competition beyond Waymo. And there's just a very simple question that I think investors should ask themselves. Do you believe that autonomy is a better way to get around? And if the answer is yes, then you probably should invest in Tesla.
And I just want to get to the pay question and this $1 trillion package, and it brings up many things, Gene. The Apple example is Steve Jobs, key man risk. We have Tim Cook now. Apple's doing okay. All of these plans that Tesla has is clearly Elon Musk is going to be contingent, a key part of that. Is he worth $1 trillion? Is he worth $1 trillion? Is that a small price to pay for these big goals, effectively?
Well, I mean, it's funny you say that was the last topic that came up as they were closing the remarks. It ended up being probably the most colorful part of the call is his commentary around this vote coming up here. And so it's important to him, is my point. I mean, he cares about how this plays out. And the $1 trillion, the comp package, it's a big number, but remember it's in tranches. There's 8 different tranches to get there. He has to do a lot, and he may end up getting there. And if he does get there, you're looking at a valuation well above $5 trillion for the company. So in the context, I think it would be worth it. And at the end of the day is that, Elon is controversial, but he's also a winner. And I think that Tesla investors will ultimately agree on that and agree on that pay package.
Gene Munster, it's great to have you again, co-founder and managing partner at Deepwater Asset Management, joining us out of Minneapolis here this evening. You're checking PopMart shares, and we continue to see this decline here, about 10%. In fact, that is the biggest drop we've seen since April. We got plenty more ahead. This is Bloomberg.
Okay, all right. This was supposed to be largely uneventful. It still largely is, but we're getting more lines that perhaps makes the plot more interesting and compelling as we go into the last meeting of the year, which is in about a month or so. So it looks like this one was not unanimous. Certainly the door now seems to be open. But as you can see, a third of the members do see a hold as perhaps the base case over the next 3 months or so.
But 4 out of the 6 were open to a rate cut in the next 3 months. So as you say, leaving the door open, and maybe this is a board that is a little bit more leaning towards the dovish side, given the concerns that they keep flagging about the household sector, right, and what we're seeing in terms of real estate. And certainly that's going to be a key thing on why they might have to cut one more time before the end of the year. So that certainly is why the market, I guess, in some ways is leaning a little bit more dovish, right, in terms of their reaction in the yuan. We continue to see that weakness there. And yes, stocks are almost catching a bid here and really buying on this dip. We've completely erased all the gains now, and we're slightly up in the Kospi. Yeah,
the doves are slightly out. Who let them out? Governor Rhee and all the comments coming through here. And what's interesting, too, is they've actually kept some of the macro forecasts, most of the macro forecasts unchanged, right? 2025, 2026 GDP in line with what they were thinking a few months ago. Inflation will stay near 2%. So it seems like the openness of most on the monetary board seem to suggest little to do really with macro numbers themselves, but some of the sort of granular numbers like household debt and maybe the uncertainty that weighs really outside and as it pertains, I guess, and how that goes back into growth. Korean won is now on the weaker side of things, certainly feeling that dovish pivot. Also, as Yvonne is pointing out, the equity market is also coming off its lows of the day, now trading slightly positive in the Seoul session today. Plenty more ahead. This is The China Show. Right, welcome back. We'll take you straight back to Seoul right now. The ongoing briefing out of the Bank of Korea. And yes, they are not done cutting interest rates. Governor Rhee talking about how they are keeping the easing cycle, but they're just adjusting, but cutting the scale and also adjusting the timing of any future cuts.
Yeah, so if you're wondering if that pause that we've seen since July is indicating that they might be done, I think today you're just hearing from the governor saying, yeah, we are not quite there yet here. So they're still not sure if a cut is possible, or is it too early to say right now in terms of November, but we already are seeing some economists say that could be the next sort of meeting to look ahead to. But yes, they mentioned here housing risks exist, but they mentioned low growth is a bigger issue.
Yeah, there we go. Yeah. So one more meeting for the year, and it does seem that's going to be a live one based on the commentary that's come in. If you think about how strongly worded his statements are, just keep in mind the context that he is, of course, answering direct questions from reporters. So that, I guess, it just underscores the context of why the comments that have come through seem to be a bit more pointed than the actual statement about an hour ago.
Also talking about the stock market right now, Korean stocks not overvalued by global standards. So certainly they're talking, given the records that we've been seeing in this market, he's saying, look, it is justified at this point. We're focusing on trade and all that here as well. We're watching some of these software stocks in particular in the mainland here after what we heard from the White House, right? An official has confirmed that the Trump administration is weighing curbs on critical software sales to China. But Bloomberg Economics thinks these measures might be tricky to execute. Let's bring in Adam Farrar. He's our senior Asia-Pacific geoeconomics analyst and joins us from Seoul this morning. So obviously, it seems like it raises the temperature once again on where we are when it comes to the U.S.-China trade tensions. The execution side, you say, might be tricky. Tell us why.
So to start with, I think we need to put this in the context of the posturing we're seeing on both sides in the lead up to Secretary Besant's meeting this coming weekend with his Chinese counterpart, and then the potential meeting between President Trump and President Xi in South Korea towards the end of next week. But when we look at these specific new claimed export controls on software, there are lots of questions that we're left with. The first really is this, theoretically an issue that's being put on the table just as negotiating leverage, or something the United States is looking to push forward on? If they do actually seek to implement this, there are big questions, as we wrote earlier, on whether that could actually be done in any near term, given both the size of the U.S. market and influence on the global software industry, and then more importantly, the limitations at the Commerce Department responsible for enforcing these new regulations, both in terms of their size and the large losses in personnel that they've suffered under the Trump administration, raising real questions on whether, even if these went into place, how they would be implemented.
Okay, so Adam, it seems, we've been talking about how everything is really going to be on the table next week. Among the many things that are now, let's call them live items, what do you think are the top three things we should be paying attention to between Xi and Trump?
So, clearly the president has come out and laid out what he sees as the biggest issues to address. And President Trump has put export controls on rare earths and critical minerals, and soybean purchases, broader agricultural purchases from China, which have cratered this year and usually account for over $12 billion of market share for U.S. farmers and have really hurt farmers in the United States. So for him, I think that's the priorities. On the China side, I think we're really looking at this question of how to bring down the tariff and how to ensure that the United States doesn't expand its export controls on critical semiconductors and potentially backs off of some of the controls that are already in place. But our base case currently, given the limited time left, is that we're really looking at yet another extension of the tariff truce with some comments on other actions potentially, but not a lot of time to get a bunch of things done here and announce specifics in just under a week and a half.
Adam, excuse me, fantastic. Thank you so much. Our Bloomberg Economics senior geoeconomics analyst for the Asia Pacific. It's nothing you said. It's just something in my throat. Okay, joining us out of Seoul. All right, continuing our coverage from Seoul, let's take it straight back to Shanghai now. That's our coverage, of course, of the Bond Summit beginning today in Shanghai, and get it back there to Stephen Engel, our man on the ground. Steve.
Hey, Dave. Yeah, we're continuing our coverage here at the Bund Summit on the Puxi side of the Huangpu River, of course, at the Bund Summit. And our next guest is Monica Defend. She is Amundi's Investment Institute head and chief strategist. Thanks for joining us.
Thank you for inviting me.
Of course, the crowds are coming by, getting noisy just as we're starting the interview. So.
Murphy's Law.
Right. So unlike this, there seems to be a bit of a momentum unwind in markets right now. How do you read this? As a temporary dip and the opportunities to buy? Or is this, sending warning signals to the global investors?
I think we really need to distinguish the short-term dynamics with the medium-term perspective. So on a short term, I think really this is short and getting along with the noise we are seeing on the tariffs, on the situation between the United States and China talks going on more medium term. Then there are risks related to the debt sustainability, inflation fears, concerns on the independence of the central banks. But for now, it's just a profit-taking moment, I would say.
Yeah, what's interesting, I found, at a time when, of course, the U.S. equity rally is a little bit wobbly, the proportion of companies beating earnings expectations this quarter is the highest since 2021. So there's this contrasting signals.
It's continued to surprise on the upside the earnings reporting season, right? And analysts have been revising upward progressively quarter by quarter their expectation. My point is then, we have seen on the tech sector, right, this AI rally. The important thing is how it will spread to the other sectors. So we really need productivity to increase. And for this to materialize, we need a spillover from tech into the other sectors.
Yeah, well, that's a good point because, while the market might take a breather, many of them are taking that breather away from the more speculative names, including the AI speculative names. Would you agree?
Yes, I agree. And actually, probably looking at industry level beyond sectors, communication services, so might be a better way to diversify the portfolio. I really think that going into the remainder of the year, the real key word is diversifying your risk on the portfolio.
That's right. Let's talk a little bit about the China-U.S. relationship because, of course, we've had 6 months of tariffs right now. First of all, what direct impact would you say that has had on the U.S. economy as it relates to stocks? Because inflation hasn't really spiked up yet, right? And then there's a lot of hopes are being pinned on this potential meeting between Xi and Trump, which I believe you don't think is necessarily a market-moving event.
Well, on the tariff, I would say it remains fluid. Given the way the subject is approached. What we saw is really on rare earth the stance of China saying, look, we have something to bargain, which is not necessarily the position of every region or country. So they will be on the same level at a time where we see exceptionalism on the U.S. on the tech sector, directly complemented by exceptionalism in China on the tech sector as well. On tariffs, I think that we've been surprised by the limited effect that we have seen so far. Probably the weakness of the US dollar, in particular at the beginning of the year, has been helping along with the liquidity that this has created. And still you see how markets and geopolitics, geoeconomics are intertwined, I would say.
What's your outlook then for some Asian equities, in particular in China? There's always the specter of the national team coming in and propping up stocks. In fact, I think it was Goldman who recently just upped its forecast for Chinese stocks by 30% through 2027. There could be policy support. What are you looking for out here?
Well, in general, Asia is a nice way to diversify your portfolio, not only in the short term, but in the medium term as well, because of the nicer demographic and growth perspective. When it goes to China, we just revised up our GDP expectations for this year and next year. We think they are well on track this year on the 5% target. Sector-wise, probably is on batteries. It's really transformative, right? The technological sector in China, and this is where we are looking at. Maybe on electrical vehicles, with the anti-involution, we might be more cautious. But probably there has been a shift in the policy stance, which is adequate, from all in to just enough. And they are really measuring the way to transform the economy into a more consumption-driven economy. And when I look at the AI effort, what to me is very strategic is what they're doing. AI is for the people, is how for increasing the wealth of the nation, which is strategically quite smart, I would say.
Before we wrap up, do you have a hot take on gold? I mean, we're talking record highs. What a blistering rally we've seen. Central banks have been buying it up. PBOC here in China, 11 consecutive months through September of buying and accumulating gold. Obviously, it's a hedge against the volatility that we've seen. It's come off boil, but has it seen its peak for the year?
Well, there are plenty of reasons to see gold prices to move higher, the one that you were listing, so that we might see in 3 years a target around 5,000. What is different nowadays that retail investors start entering the gold trading, and this is creating this kind of swings on the prices that we have been seeing in the recent days.
Monica, great to talk to you. Could go another 5 minutes. We're out of time. Thanks so much. We're going to send it back to Yvonne, and more, of course, is still coming from the Bund Summit here in Shanghai on day one.
Yeah, I look forward to it, Steve, and our thanks, of course, to Amundi for that great interview. We got plenty more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. Chinese firms, including the likes of Huawei and Alibaba, are courting Africa startups and innovation hubs with open source AI models. You have Huawei, for example, promoting DeepSeek as a cheaper alternative to Western AI models like OpenAI. For more on today's Bloomberg Big Take, let's bring in our AI reporter, Sarita Rhee, joining us out of India. So, Sarita, the thesis here is certainly that's the blue ocean, as they say. Why has Africa emerged as a battleground for this technology?
David, you're absolutely right. AI is the world's most in-demand technology, but much of Africa is really uncharted territory for AI models and tools from anywhere, whether it's the West or whether it's the Chinese AI models. So OpenAI, Google, the likes of DeepSeek are all vying to enter the market, because Africa's digital economy is now currently valued at $180 billion, but projected really to grow very fast to over $700 billion by 2050. The continent has over 1.5 billion people, and it's a region with a very healthy population growth, which is strategic for a lot of these companies, whether in terms of new customers, soft power, and the vast troves of human-generated data that actually will shape the future of AI.
Yeah, there's certainly the potential there, Sarita, which is quite interesting. What's been China's approach in AI for the continent specifically? What's the pitch that they're making?
So while a lot of the Western AI companies have focused on the more lucrative, economies or businesses, Africa is, being targeted by a different approach by Chinese AI models. Outside of South Africa, actually, users don't have access to computing resources, which are really expensive and scarce in most parts of Africa, making AI less power hungry, less compute efficient is really a goal for African users, and that is where the Chinese AI model builders come in. Also, the proprietary closed source approach of Western AI model builders is not something that Africa favors. African users want flexible, lenient licensing terms and cheaper costs. So companies like Huawei and Alibaba are courting Africa startups with open source models and cheaper payment tiers. So that's where, the Chinese and US AI model approaches are very, very different.
Sarita, thank you. Sarita Rhee there joining us from Bengaluru. Let's switch on and focus a little bit more when it comes to Taiwan. Now, sources are saying that officials there are courting podcasters and influencers aligned with President Trump. Now, that's amid concerns that the U.S. leader could undermine the island's interest in talks with China. Let's bring our economy and government reporter, Yan Lee. He joins us now from Taipei. Yan, it's a great piece. Tell us a bit more about the strategy from Taiwan and what they're trying to achieve here.
Yeah, thank you so much for having me. Yeah, so we are seeing this very interesting trend that Taiwan is increasing its engagement with so-called MAGA figures or influencers in the U.S. And so the broader background is that ever since Trump won the presidential election last year, officials in Taipei have been increasingly anxious about Trump's transactional approach and whether Trump could, undermine or sacrifice Taipei's interest in order to engage with Beijing. So this is, the latest, interesting trend is part of their efforts to trying to engage and trying to elevate Taiwan on Trump's agenda, and especially at a time when, Trump and his administration has been busy working on reaching a trade deal with Beijing and also the upcoming meeting between Trump and Xi.
Yeah, if you could talk to us more about the who are these influencers and podcasters that Taiwan has been engaging with?
Yes, so actually Taiwan President Lai Ching-te did an interview with podcaster Beck Sexton earlier this month. And also Vice President Xiao Biqing did a similar thing with Sean Ryan back in June. And also Taiwan's de facto ambassador to the U.S. Did an interview with Steve Bannon, and he also openly dined or met with with Sean Ryan earlier this week. So all these are the examples that we have been seeing. And also the U.S. officials has stated that they encouraged Taiwan to engage more with new media outlets to communicate with real American instead of just liberal elites.
Yeah, thank you so much. Our Bloomberg economy and government reporter Yan Lee there in Taipei for us. If you're a Bloomberg subscriber, you can rewatch that specific conversation we just had there, whether that's on the Taiwan story or China's charm offensive on AI as far as Africa is concerned. You can scroll back. TV Go is the function that you run to take you through the programming today, all the interviews you might have missed. So check it out on your Bloomberg terminals at TV Go.
Well, Chinese tea chain Chagee says it will stick with its strategy of premium products at higher prices, largely staying out of the price wars across China's consumption space. The co-founder Shang Xianmin spoke exclusively with us about that decision and the company's global growth ambitions.
In the previous 2 years, our business expansion focus was the Chinese market. This year and next year, we will have more business expansion in overseas markets, especially in the second half of this year and the first half of the next year. Southeast Asia will become an important focus for our market expansion.
So you have opened 2 stores in the U.S. so far. How has sales been like, and what is your expansion plan in the U.S.?
We've seen strong performance from the newly opened stores in Los Angeles. On the opening day, our sales has exceeded 5,000 cups, which is an outstanding performance for us. The American consumer indeed has the strongest purchasing power in the world, and the U.S. market is one of the most valuable markets for us. There is no doubt as to how much we value it. The U.S. market has been playing a leading role in global consumption trend.
Has the U.S.-China trade war had an impact on your business, especially in the U.S.?
When we talk about political geography, we don't think it's particularly relevant for our consumer companies. From the point of view of making a product, we think that having a good taste, a good smell, and good look, also even the good experience in our stores, these are the things that our consumers mostly cared about. To us, there is no impact on us.
This summer, we had seen a very intense price war. How big of an impact does that have on your business?
We did not fully participate in the price war. It has some impact on us, but we believe this is only temporary, and we hope this is a continual process of value building. Domestic sales this year has been better than the same period of time last year, but overseas sales has seen bigger growth.
There has been talk about how Chagee is looking to become the Starbucks of the East. What lessons are you learning from Starbucks, and what challenges do you face in trying to be this very unique and ubiquitous brand in China and across the globe?
Starbucks is a great company which has always been a role model for us. I think Starbucks, through decades of development, has been able to bring coffee to the world. We also hope that, like how coffee culture develops, we would like to take tea culture to go further. This has always been our goal and idea.
Chagee co-founder Shang Xianmin there, speaking exclusively with our Min Lo in Shanghai. Yeah, you talk about emotional consumption, and certainly bubble tea or tea is certainly one thing. And then you talk about Pop Mart. That certainly is one story here. And there you go. We're off some of the lows, but we're still talking about one of the biggest drops since April on that stock. I think Morningstar had a pretty interesting note, right? The earnings were strong, or at least the sales numbers that we saw this week. But, are we seeing maybe the peak? When it comes to those numbers in 2025, 2026 might be a different story.
It's hard to replicate over the coming quarters. I think the comment coming through out of Morningstar, and this is really part of the whole, if you have any doubts, sell the big winner, sell momentum. This has really been one of the big momentum plays, 30% down now, in fact, from the peak back in August 28 on the stock price. Right, let's have a look at, again, another day, another listing. This one, we now understand, based on sources, that the company is now planning to start taking orders for an IPO or listing here in Hong Kong. Next week, Shanghai shares are up about 1%, and the other one is Sands China on the back of, I think, the reporting coming through out of Las Vegas Sands overnight. We're up 3% as far as this is concerned. So certainly the beat there is translating to certainly the outlook here as far as the casino space is concerned.
Yeah, so that certainly is a bright spot here across these markets today. But yeah, that is it for us here on the China Show. Insight with Haslinda Amin is next.